Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now, as we head into the second month of the third quarter, inflation and the COVID Delta variant, they are now the major themes that are dominating and driving the financial markets. This year, the US economy has seen inflation accelerate at its fastest pace in more than a decade. On Friday, the Fed's preferred measure of inflation, the core PCE price index, that rose 4% in June, which is the biggest increase since July of 1991. Meanwhile, the consumer price index, that jumped from 5% to 5.4% in June. That's the highest level since 2008. Whilst the core CPI inflation, that rose from 3.8% to 4.5%, which is its sharpest increase in 3 decades. Elsewhere last week, Fed Chair Jerome Powell, he acknowledged that inflation has risen much faster than he and other senior Federal Reserve members had predicted. He also acknowledged it's possible that inflation could turn out to be much higher and much more persistent in the second half of 2021. Many economists, they are forecasting that inflation will climb to between 6% and 9% by year end. Now, on last week's commodity report, we highlighted with you $1,793 per ounce on gold and sub $25 per ounce on silver, presenting highly lucrative opportunities to capitalize on the short-term macro-driven volatility. Since that report that we put out earlier on last week on gold asset of the day, gold prices, they broke out $40 to the upside, or over 400 points. So once again, everything we identified with you, that played out exactly as predicted. Silver prices also broke out 3% to the upside last week. Now, looking ahead to next week, all eyes will now be on July's non-farm payroll data, especially as inflation pressures look set to remain elevated for much longer than expected. Nervousness is also coming back in the stock market as the US debt limit suspension that expires on Sunday the 1st of August. The current level of debt now sits at $28.5 trillion. This now puts pressure on Congress to find a solution that will allow the government to keep borrowing and prevent the US from defaulting on its debt. Without a deal, the US is on path to default, which will likely open the door to more volatility ahead. As we know, volatility that creates opportunities. Banks and hedge funds, they are making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures so far this year, and we're only halfway through the year. Goldman Sachs has already begun preparing their clients for what they predict could be one of the most profitable quarters ever seen. So if you've been kicking yourself for missing out on some of the biggest trading events so far this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we move into a new week. Firstly, let's move it over to gold. So as we discussed with you on the week ahead commodity report and also gold asset of the day, you wanted to look to be a buyer on dips back down towards the 1795 to 1793 handle. We saw that level get tested multiple times over the last 2 weeks. Every time we've tested that level, we have seen gold reclaim above 1800 again, and we saw a significant breakout after Wednesday's FOMC statement, over 400 point move to the upside. Gold came back and retested the 1 month highs. Silver prices, they broke out 3% to the upside, and this is where many traders were getting ultra bearish last week, expecting precious metal prices to break down much lower. And we've of course been talking you through this great opportunity to buy into gold at that 1790 to 1795 zone. Any price that you can get really sub 1800, we would perceive as a good opportunity for you to capitalize. And we've now seen that breakout that we mentioned with you, predicted over last week's reports, where we've seen that breakout after the Wednesday's FOMC statement. So now going into a new week, gold closed at $1,813 per ounce. I would look again for a retest over next week to come back up and test those previous swing highs here. So again, I'm expecting a range bound market Any dips below 1800 I would perceive as a buy opportunity at the moment for gold. I am expecting a retest again back towards the swing highs that were tested in the last week. Now, this sell-off that we've seen on Friday, that will likely shake out a lot of traders who bought too late into this move. We discussed with you so many times that we like to get early into these trades. So if you bought in around the 1795 zone, you've got no problem at all taking some profit off the table after it breaks out 400 points on Thursday. Where you're going to get in trouble, of course, is if you buy right at the top of the move, if you FOMO in at the 1 month highs, and then of course you see a sell-off on the Friday, which is very common because it's the end of the month. It's the last trading day of July. Gold price is pulling back over 220 points to the downside. This is of course where you would want to lock in your profits and then take advantage of this volatility. This is really the name of the game right now. Be nimble, make sure that you are locking in profits regularly. Don't FOMO into trades, and often when many traders are freaking out there, when many traders are getting ultra bearish, it's typically one of the best times to be buying into these markets. Copper's a great example of that. As we discussed with you, we've been building into positions over the month of July. Last week at the start of the week we banked 1,200 points on copper. So for every one lot that you would be trading, that's $12,000 of profit. For every 10 lot contract that you'd be trading, that's $120,000 of profit. Copper prices, they broke out to 6-week highs. We have 5 positions on copper. That put all of our positions significantly in profit. And you can see here on Friday, very much like silver, we've got end of month profit taking as we're getting a bit of a pullback after breakout to 6-week highs. But I still like copper here throughout this quarter. We're maintaining our position on this market. Another market I'll put on your radar here is platinum. So platinum again broke out on Wednesday through to Thursday. It's now trading back towards the 1 month lows here. So it's retesting the June swing lows, which is where we built positions previously, where we banked 2,300 points on this breakout in the middle of July. We've subsequently built into much lower positions here, which has been really a gift over the last week. So essentially with platinum, you want to trade the volatility on this market. Don't get too complacent with any trades out there at the moment. Make sure that you're regularly banking your profits, but at the same time, be mindful that when you have pressure to the downside like this on the metals, this is where many traders, they start panic selling out of positions. The sentiment turns very negative and they often miss great opportunities to buy in much lower. Then moving over to palladium, we've seen quite a tight range on this market over the last 3 sessions. We've got 2 trades on this market that we established at the 2,500 zone with our clients at the Gold and Silver Club, and currently those 2 trades are up over 3,000 points in total combined. So that looks very strong at the moment as we go into next week. What I want to see here on palladium is whether we get the typical breakout over this cycle throughout this quarter and make a retest back towards the recent swing highs here that were tested back in the beginning of July here. So ultimately we want to remain with our long positions on palladium. Any sell-offs that we were to get back down towards key levels of support here, I would be a buyer on dips on palladium throughout this cycle. It was just 2 months ago that palladium was trading at all-time highs above $3,000 per ounce. That was also the same with copper as well. At the end of April, beginning of May, breaking out to all-time highs. Then finally, moving over to silver here. Feel free to go back and watch our analysis from the week ahead commodity report and also gold and silver asset of the day throughout really the last month here, as we've continued to talk you through opportunities on silver. If we were to get back below $25 per ounce, down towards that $24.50 per ounce handle. In fact, we tapped that zone spot on last week. We built 2 more positions on silver last week, which have moved nicely into profit into the close. And yet again, silver has spent very little time sub $25 per ounce. So I do hope that you are able to capitalize on that volatility last week. We saw over a 3% breakout to the upside on silver after Wednesday's FOMC statement. Silver is another great example here of how bull markets, they do not move up in a straight line. They zigzag. This presents savvy traders with back-to-back trading opportunities. Technical analysis does not work. We are in a highly data and event-driven trading landscape. In these times of heightened volatility and rapidly surging inflation, the importance of having an essential income generating skill like trading has become a must-have necessity. If 2020 has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer an option, it's a priority to make sure that you're inflation proof and thrive and not just survive in these trading conditions. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. If you want to maximize your money-making potential and thrive, not just survive, in these markets, then you need to adapt your strategy to the current market conditions. You need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. This is where you're utilizing statistics, data, market intelligence, the facts in the market. Further marry that up with the daily, the weekly, the monthly, the quarterly cycles, understanding of the intermarket correlations, the ratios, key areas of liquidity, understanding sentiment in the market, alongside that being aware of macroeconomics, the real key drivers that will have the biggest impact on commodity markets, and of course utilizing our in-house market data and intelligence alongside understanding what the hedge funds, money managers and banks and institutions are doing. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.